Welcome back to another video, guys. This video is for Best of Channel. You requested earnings update on FinVolution, and here you got it. So a little while ago, we made a video on two Chinese stocks, FinV and QFin, and we're gonna go over how they've been doing and what's changed. So you can watch the last video to do a deep dive in what they really do. But here we can just say that both of them are pretty much the same model. We're going to go over FinV today. So FinV, they're a Chinese online platform that connects individual borrowers to institutions. So they're not like a fintech bank. They're just a kind of a technology business. They use a lot of AI, and we'll talk about that later. But they connect the individual to the institution, so there's not much risk in them. They just get a service fee. So their main business is in China, but they've been expanding rapid growth in Indonesia and Philippines. Yeah, we're going to see in the earnings report that internationally their user growth has been growing like crazy. Aside from the obvious China risk, is the reason this company is so discounted. It's trading at 4 times earnings, 800 million market cap, 300 million in income, and 4% dividend, a nice safe dividend. So the company has low debt. Yeah, the company has a great balance sheet, no intangible assets, $1.1 billion in liquidity, which is more than the market cap. Has consistently grown over the past 5 years. Yes, and it is growing I believe it is projected to grow at like 5, 6, 7%, we can see over here. So it is forecasted to grow at an annual rate of 8.6% for the next 3 years. And this is not bad. I remember in the last earnings call, they were mentioning that they are focused on getting better quality assets and getting more profit. So that is their main things, and that comes before growing the revenue. So they have a high operating margin, high return on assets, high return on investment. Yeah, we can see that right here. The gross margin's 80%, net margin, we can see it's all green, it's all healthy. We can see right here, stock-based compensation is only 8% of the cash flow. So again, this is a very friendly shareholder stock. What they do with their money, literally, is they buy back the shares and they pay back the dividend. That's pretty much almost all they do with their free cash flow. So what else? High free cash flow. That's the one thing they're missing right now. We can see over here in Stock Unlock, it says 11% is their free cash flow. And they miss their earnings, they miss the profitability part in their earnings, which is why the stock is down compared to Kifu, which killed their earnings and was very profitable. We can take a quick look right here. This is the quarterly reports. So this is Kifu. They did $1.3 billion in earnings in the last quarter with $4 billion in revenue. And if you look at FinV, they just quarter over quarter, they're even down. Or no, they're up a little bit in earnings, 550 million on $3 billion in revenue. And if we just look at the past 5 days alone, we can see that FinV is down compared to Kifu, which is up. Kifu's been killing it. Right. So what else can we say here? So yeah, they use their money to purchase stocks and pay out to investors with dividends. Even if the revenue growth slows, which I don't see happening, this is posted 6 months ago, some random Reddit post. So the major risks: China slowdown, possible. I don't know their macroeconomics. Sanction for China, possible Taiwan invasion. No one can control that. Government interference, possible. I guess those are the risks. Credit risk, yeah. And then right here we have a comment says that the China accounting risk, which is why all the people are scared of investing in China, which is like why great companies, Chinese companies like Alibaba, are so cheaply valued. And the thing is, like here it says it could be a Ponzi scheme, could be possible. This company has been around since 2007. These numbers are real. This is the unaudited financial report we're going to be going through, but it's most likely going to be exactly the same as the audited one. So this is not a fake company. This company has been around for a while. It's a pretty safe company. They have 185 million users. I think 190 now. And yeah, I think this is a very safe bet, very healthy company. We can look over here. The dividend, they takes 30% of their cash flow to pay off the dividend, which is almost 5%, 4% dividend. Very nice and safe. If you compare them, total FinV return with SPY, they're almost up there with the SPY, which is pretty rare. Not all the companies can keep up with SPY. Because what is the SPY? The SPY is 25% of this. When you invest in the SPY, about 25% of your money goes into the Mega 7, like Apple, Google, NVIDIA. And those companies have just been killing it, and they will most likely continue to kill it. And yeah, if you look at the analysts, they are projecting nice and steady growth for the stock. It's looking very healthy. But yeah, there's some bad things about the stock that we need to finally get into. So the two bad things that I really didn't like in this earnings is the 90-day delinquency rate. So it was 2.6% compared to 1.68% last year. So like we said before, they're working on getting better quality assets, giving out loans to better people. And this is the exact opposite. The delinquency rate is when 90-day plus, so after 90 days, that the loaner does not pay back his loan, does not pay back interest, whatever, doesn't pay back on time, so doesn't have the money to pay back. And that's rising, and 2% is not too much compared to other companies. It's still healthy, but just going up 1% is huge and dangerous. We don't like to see that. The other thing is the missing profitability. We can go over this quick little video. This is from Mumu. So we can see right here, this is the revenue breakdown. And if you look at the valuation, we look at the regions, right? So 82% is coming from China, 15% from Indonesia, and 2% from other, which is most likely Philippines. And this was 2023 full year. So it is getting closer to 20% now. So yeah, revenue, they did beat the estimates, but the earnings per share, they did not beat the estimates. And if you look at this, it's projected to go down, down, down until Q1 2024. Oh, never mind. This is not updated. I see. Yeah, so this is 2020 when they missed it. Okay, never mind. We'll ignore that. We'll look at the earnings report itself. But if you look at the valuation, 4 times earnings, industry average is 22, 0.7 times book value, industry average is 5, 0.7 times sales, industry average is 5. So if you look at the statistics, this company is quite undervalued. Right, so now we can just go through this a little bit. So this is the Chinese operational market highlights. So users are up 8% to 162 million. We can see that the borrowers are up, unique borrowers are up, transaction volume is a little bit up, everything is up a little bit, and is looking pretty healthy. If we look at the international market operational highlights, it is up big time. So registered users increase of 46% compared to last year, 29 million users. And if you look at borrowers, also up 40%, unique borrowers up 30%, number of new borrowers 50%. So these are just really, really great numbers. These guys are really expanding very fast, and all these users will in the future bring them revenue. So that is really nice to see. So we have the financial highlights. So net profit for second quarter was 75 million for the quarter, 550 million RMB compared to last year, 590 RMB. So they missed this net profit. They were not as profitable as they were a year ago. Don't like to see it, even though revenue was a little bit up, 3.1 billion RMB compared to 3 billion RMB last year. So revenue is growing steadily. Net profit, that's what they're so down. But I think it is a little bit of an overreaction to their down. So, but I don't know. You never know with what's gonna happen with the market. Do I think this is a buy? I think this is a good company at a good price. That's the way I see it. And if it did fall to like $4 range, that's where I could see myself picking up some shares. But for now, I don't. I'd rather invest into other things. But yeah, what else do we have here? So what does the CEO says? We served around 31 billion people around China. Alongside solid operational, this is the CFO. Alongside solid operational metrics, our financial performance improved progressively, with net revenues for the quarter reaching $3.1 billion, up 3% year over year. Notably, contributions from international revenue grew 12%. So this is the big thing. Internationally, they're growing very quickly. And if you compare it to Kifu, that is why I like FinV a lot more, because they have this whole segment of being in Philippines and Indonesia. They're much more diverse compared to Kifu, who's only in China. So, and in these areas, growth is a lot bigger because these companies are growing very quickly, and the middle class is growing. And when middle class is growing, debt is growing because all those guys are taking loans. And we can see it represents 17% of total revenue. Liquidity position is still $1.1 billion as of June 30th. So this company is very healthy. And if you're looking at investing in dividend stocks instead of buying some dividend stock that's barely growing with a 2% dividend, this company is growing 8% year over year revenues. I think the profits will be growing even faster. I think they will become more and more profitable. 4% dividend, very nice. I think this is a pretty nice stock to add to your portfolio. And it's a nice diversity outside the US. So you have diversity in China, Indonesia, and Philippines. So it's a very nice buy. Now, the share repurchase update. So this is where it gets nice. So the company deployed $30 million US to repurchase its Class A ordinary shares in the form of ADS in the market. ADS, I believe, is American, something listed in American. Okay, either way. During the first half of 2024, the company deployed approximately $56 million to repurchase its shares in combination with the company's historical and existing repurchase program. So on top of the repurchase program they already have, which has the value of $330 million, since 2018, they have bought 300 million of their shares. And on top of the current repurchase plan, they bought $56 million more, which is very bullish. It means that the company thinks this is cheap. And again, as I mentioned in the last video, Kifu has a lot less insider holders. I don't know if they even have any insider holders, when FinV has 20% of the shares held by insiders and only 53% held by institutions. And then let's take a look at how the outstanding shares have looking. So right, this is the balance sheet. No goodwill, no tangible assets. If you compare the assets to 20, look at this yourself, guys. I don't need to explain everything. Very nice growth if you just zoom out. Beautiful. And the shares outstanding is going down. They used to be at what, 1.5 billion, now at 1.3 billion. That is very nice. Just since 2019, it's went down from 1.5 to 1.3. Love to see it. And then, right, if you look at the insights, just see if you can see anything here. Revenue growing at 7.8%, has more cash than current liabilities. And this is what I wanted to see. So they're selling at a price to earnings of 4, average is 3.8. Free cash flow, price to free cash flow of 7, 5-year average is 9, price to sales of 0.8, 5-year average is 0.9. So that is the bad thing. This company has been undervalued and selling at a discount for a long time. So it's not like this company will just boom sell it at 20 or 15 times price to earnings as the industry average, which is, I believe, because it is a Chinese company. Even though it is shareholder friendly, it's a very good company. I think this will always be at a little bit of a discount. It still doesn't mean they have room to grow, but this won't be valued same as American companies, and that's just a fact. And that is about it. Best of channel. Hope this helped you out. And if you guys are still watching, thank you guys so much for watching. Please hit the like button and subscribe. Really excited to go 50 subscribers, and comment down whatever video you guys want next. Whatever you comment down, I will put my time and effort into making the best video I can for you guys. So have a good one. I'll see you in the next one.